Well, earlier this morning, Yahoo Finance's Cheung spoke exclusively with St. Louis Fed President James Bullard about the economy, monetary policy, and more. And Brian joins us live now to discuss. So, Brian, I guess walk us through this conversation. You and I were talking yesterday about how Bullard tends to be one of the more unconventional thinkers among members Fed presidents at the regional banks.
Right, yeah, so and as you mentioned, it is St. Louis Fed President James Bullard that I spoke with here in the Catskills this morning. We were chatting a little bit about his dissent. As you mentioned, he has been an outspoken member of the Fed, actually opposed the Fed's decision in December to raise rates by 25 basis points. I asked him about that and also about the inverting yield curve. This is our conversation.
What the market is saying is they don't see as much growth, and especially that they don't see as much inflation in the future as the Fed might see. And I think we should take that signal seriously.
So on the rate path, you were talking about this earlier. It was interesting how you were one of the few who were actually calling for perhaps actually not doing the 25 basis point rate hike in December. It seemed like there was a harsh market reaction to that. Do you think that was categorically a policy mistake, or was that more of a mistake in the interpretation of the Fed communications through that meeting?
Yeah, I did argue against it at the meeting. I thought that at a minimum, what we could have done is delay till the January meeting and just see how things sorted out.
Which again, you were not a member during this. You were not a voting member during the December meeting, but
yeah, I'm in January. I was in January, so it doesn't. This business about members, doesn't really matter. You've got everybody's at the meeting, everybody's talking at the meeting, everybody's got plenty of ammunition and plenty of arguments to make. So I think we could have waited till January. We didn't play it that way. We tried to do a more dovish hike. It didn't come off very well. But I think since the first of the year, we've adjusted very well. Also, I would say in December, I'll say this about December, we were saying that we were going to go through with our rate hike, but in addition, we were also saying there were more rate hikes to come. And in addition to that, we were also saying the economy is definitely going to slow down. And I think it's that confluence of actions that made this be confusing to markets and cause a lot of turmoil. But we've adjusted since the first of the year. I think we've made a good adjustment. Now the committee, median of the committee, is not projecting any rate hikes in 2019. Let the data come in. We'll see how things develop, especially on the inflation front. So
if we could drill a little deeper on that, was it principally the dovish hike itself that was the issue, or the communication of it, having said that?
Well, I don't think there was really any way to communicate it differently if we were going to put out that we planned more rate hikes, but we also we also anticipated a slowdown in the economy. There was no way to sugarcoat that, I don't think. So that's how we ended up. But again, I think since the first of the year, over the last 3 months or so, we've adjusted policy. I think that showed very good leadership by Chairman Powell in being willing to adjust. It shows that we're data dependent and shows that we're sensitive to what's going on in the macroeconomic environment.
So again, as you can hear, James Bullard, who is a voting member of this year's FOMC, saying that he actually feels that even though it was not necessarily a policy mistake to raise rates by 25 basis points, that it was unavoidable for the Fed to communicate it in any other way. I did also ask him about whether or not the next move would be a hike or a cut. He didn't exactly bite on what the next move might be, but said he does expect better news in the second quarter.
All right, Brian Cheung in very scenic Annandale-on-Hudson, New York. Thanks so much.